Namaskar and welcome to Sunset Television. I am Vishal Dahiya and you're watching our show Perspective, where we bring you detailed analysis of key national and international issues. Today we're going to talk about India's FDI inflows. Now, India rapidly has emerged as a preferred investment destination, with FDI inflows increasing 20-fold in the last 20 years. Highest ever annual FDI inflow of 83.57 billion US dollars were recorded in the financial year 2021-22. This figure stood at 45.15 billion US dollars in 2014-15. In terms of investor countries of FDI equity inflow, Singapore is at the top with 27%, followed by USA with 18% and Mauritius with 16% for FY 21-22. Now, computer software and hardware has emerged as the top recipient sector of FDI equity inflow during this period, with around 25% share, followed by services sector and automobile industry with 12% each. With 53%, Karnataka has received the majority share of FDI equity in the computer software and hardware sector. In order to promote foreign direct investment, the government has put in place an investor-friendly policy wherein most sectors except certain strategically important sectors are open for 100% FDI under the automatic route. 853 FDI proposals have been disposed of through the Foreign Investment Facilitation Portal in 5 years since the abolishment of Foreign Investment Promotion Board, or FIPB. So today, in Perspective, we'll try and understand all these aspects, these numbers, as well as what lies behind these numbers. Why is there a surge which we see, and specifically during the COVID period as well? And for more on this, we're joined by a distinguished panel of experts. Let me first introduce them to you. Beginning with, we have with us in the studio, Mr. Shubhmoy Bhattacharjee is joining us. He's the consulting editor with the Business Standard. Welcome, Shubhmoy. We're also joined by three more panelists. Mr. Rajiv Mantri, founder and MD of Navam Capital, is with us. So is Mr. Sandeep Agarwal, chairman of the Industry Affairs Committee at PSD Chambers, and Mr. Dilip Chinoy, former Secretary General of FICCI, is also with us. I'll start with you, Shubhmoy. Let's first start by, trying to decode these numbers. What exactly do they denote? One is very clearly, which is evident, is there is a surge in the numbers. Although the surge vis-a-vis the last year is a bit, less. But if we compare it over the past 10 years or 15 years or 20 years, this is a huge, jump in numbers.
Absolutely. And what's important, Vishal, is to remember that when the FDI flow is coming in, there's often, understanding or sort of a discussion that is it coming to, which sort of sectors it's coming to. My point is that obviously it will come to the sectors where the returns would seem the maximum. So I'm not surprised it's coming to the IT sector. It's not surprising that it's coming to unicorns, for instance. That is exactly what it was expected to be. If it was that earlier it was coming extremely to manufacturing, there was extremely high investment there, today it's not coming there, then there would have been a cause for wondering that why is this change? Mm-hmm. But we don't see any change of that sort. We see that as the economy is going up, the investment, the FDI, is typically tracking the sectors which seem to show the higher growth potential.
Okay.
And that's exactly what one would expect. They are not here for charity. It's supposed to be here for income generation purposes. So therefore, it's quite right that the FDI would be coming into sectors which seem to show the highest possible returns. And that's fair enough. Okay. The numbers are interesting. That it has not grown up much beyond 2021 was because 2021 was an exceptional year. And there were some very large ticket investments that happened that year, which had bumped up our FDI. Mm-hmm. Next year, the year that we are talking about now, didn't have that many number of those big ticket entries. So therefore, you don't have a leg up of that sort. Okay. But I suspect that as now the economy is opened, by all certainties, India is now looking a much better investment destination than most of the world. Mm-hmm. I would be looking forward to quite a few interesting deals this year.
Okay. But when we do, a comparison of those numbers, there's a very interesting aspect there as well. And I'd like to bring in Mr. Chinoy and others as well. I'll start with you, Mr. Chinoy. During the COVID period, when the entire world economy was trying to stay afloat, if you look at that particular period, there has been a very sharp increase and a significant one as well in terms of FDI inflows.
Actually, Vishal is right. And, while you were having the previous discussion, there was a nice, interesting thing at the bottom saying that manufacturing FDI has gone up by 76%, whereas computer and hardware is a top recipient there. But even manufacturing has gone up. I think if you broadly look at it over the last 8 years, this government has really focused on the FDI policy by doing three different things. First, it has extended, the sectoral caps in many sectors. Second, it expanded. So, you took telecom into the automatic route, for example. And the third thing, it diluted different aspects, whether it is the single brand retail or the domestic procurement, etc. So it's extension, expansion, and dilution. The other thing is a taxation benefit that was announced a few years ago on reduced corporate tax on manufacturing sector investments has also led to the manufacturing investment go up. Like Sukumar said, of course, the unicorns are attracting a lot of things in computer and hardware, but the the PLI scheme or the Make in India initiative on the whole mobile phone, piece where from an importer, we become a net exporter. We have over, 150 companies investing in both the handsets and the accessories. And every contract manufacturing company has actually invested. Much of this investment came in last year. So you are seeing this happening. And in addition, some of the other schemes that were announced by the Ministry of Electronics, for example, they found traction last year. I believe that this is going to continue, and going forward, you're going to see significant investments. And hopefully, in the next 2 years, we are very close to the 100 billion mark. We're 83.57. It might just cross the 100 billion mark in the next 2 years going forward.
Okay.
Definitely by 2025, according to an EY survey, it's going to be about 120 to 160 million dollars. Basically, because many investors have ranked India as a third most favorite, attractive destination for FDI. Most of them, 80% say that they're actually going to invest in the next few years, and roughly 25 to 30% say they've already invested more than $500 million in India.
Okay.
So there is a huge thing, and the government also is going out. The Prime Minister himself has very recently, he met 30 CEOs in Japan, asking them to invest. So whether it's the finance minister, the commerce and industry minister, or different sectoral ministers going overseas, they're really pitching India as an attractive investment destination.
Indeed. There is a lot of push from the government as well, vis-a-vis both policies as well as, putting their best foot forward to the overall, investors in the world. Let me bring in Mr. Sandeep Agarwal here. Mr. Agarwal, going back to understanding these numbers from two perspectives. One is from the perspective of looking at various sectors, be it manufacturing, whereas there is a huge jump, but the largest share goes to computer hardware and software. Services and auto sector stay at around 12% each. Is that something which is on the expected lines?
Yeah, exactly, because the government has understood that India has to become a manufacturing hub for the world. It has to replace China. India has a $193 billion deficit, approximately, on trade. So, and on even a current account, we have a deficit. So it is very important that India becomes a manufacturing hub. Government understands it and has given all the facilities to the industry today to make India into a global manufacturing hub, be it electronics, be it mobile phones, be it the components for those, automobiles, any manufacturing sector, even chips. The government is investing heavily into the Indian manufacturing sector. Today, we have 100 unicorns in India. So, this is because the globe, the world is looking at India to be the manufacturing hub for all the products which they can think of. China has a spat with the US, they have a spat with Australia, they are having a spat with every conceivable country. They are good friends. Germany is no longer the good friends with them. So basically, every country is looking for an alternative
option.
Vietnam was an alternative, but it is too small a country. to take the international demand.
Okay.
And now the world has only one option, which is India. Our nation, our Prime Minister is doing best to benefit from what world is looking at.
Okay.
And we are going to deliver. I
Okay,
can be assured.
India has emerged as the preferred destination there. Mr. Rajiv Mantri, how would you describe this record FDI inflow in this financial year? That's one. Two is the jump which we have seen. And also, when we go deeper into these numbers, the surge in various sectors, as other panelists are pointing out, manufacturing seems to be the key focus area. And of course, the services sector and the auto sector is also included there.
So I think it's the first of a run which will break many records, is how I would put it. So I think we are in for a very strong, probably next 3 to 5 years. And I think across sectors and in aggregate, we will see many records falling by the wayside. And I will also point out, in addition to what Mr. Chinoy and Mr. Agarwal pointed out, on the sectoral side. So if you look at the composition of even within the services or IT services space, which areas are getting the FDI, I think there is a certain sort of upskilling happening there as well. We are kind of moving up the value chain, where we are seeing sort of engineering R&D oriented sort of outsourcing centers drawing that capital. So there are very large, like Global 500, Global 1000 corporations setting up in India and building facilities here to support their core operations in R&D.
Okay.
So that just speaks to the depth of talent, the depth of the kind of on the product side, what India has to offer. And that is something which you won't find in many other countries. So for example, whether it's manufacturing and, there's a large demand for labor, or whether there is that deep technical talent pool. I think both those offerings that India has, practically no other country has in the world today.
Okay.
And in addition to the supply chain diversification, which is already happening, I think this is going to be a big driver for that uptake and record-breaking FDI, which I think we'll continue to see.
Okay. Mr. Chinoy, do you agree with Mr. Mantri here? Clearly, if you sum up what he's pointing out is that this curve is going to see an upward movement only for the next 4 or 5 years, given the demand and given the policies which are there, and given the economic fundamentals of our country.
No, that's right. I think, like I said, this is going to be first of many records to come. And I think we should tie this also with the strategic aspect, where India's diplomatic outreach, India's efforts to build alliances, economic alliances with the Western Bloc in particular.
Okay.
Some of them are just starting to pay off. So we will see more and more free trade agreements getting signed up in the coming year or two. We will see a certain sort of closeness when it comes to key sectors like defense getting further deepened. That has already been happening in the last 2-3 years. That'll get further deepened. So I think these are further tailwinds which will only increase FDI flow to the country.
Okay. Mr. Chinoy, do you agree with all those stipulations made by Mr. Mantri here, that this is, of course, going to be an upward curve only from here onwards? Mr. Chinoy?
Shall is that to me?
Yes, Mr. Chinoy.
Yeah. So like I also said, the EY survey actually talks about $120 to $160 billion per year by 2025. So it's going to be an upward curve, definitely. And like was also mentioned by Mr. Mantri, was that the defense sector, and now even the space sector is going to be opened up. So you're going to see investment coming in there. And all the PLI schemes, other than the telecom, because the telecom was announced earlier, but the others all will kick in this year and the next year. And a lot of these PLI scheme, has been given in the, let's say, the auto sector. It is Suzuki, and foreign companies. So they're going to bring in FDI, whether it is the air conditioning and refrigeration or white goods sector, or, you take sector after sector, the 14 sectors that are there, a lot of them are foreign companies based in India. They're only going to add to getting FDI in.
Okay.
And like Sukumar said, the whole IT sector or the digital sector is going to grow You have just recently heard announcements of FDI in the media space also. So you're going to see a lot of that happening. And the government in the manufacturing has actually done something very interesting. Whether it is the creation of the land banks and putting it on a live portal, or the Gati Shakti project on logistics, and the whole investment in infrastructure.
Okay.
So as these investments kick in, India's attractiveness as a manufacturing destination will improve. Companies will look at it in a different set of lenses, and you're actually going to see, just to paraphrase Mr. Mantri, many records being broken as we go ahead.
Okay. Shubhmoy, apart from the fact that the amount of money coming in and where it is going, also important is where it is coming from. And what does it indicate? Now, if you look at this particular data, the top spot is taken by investors from Singapore, followed by United States of America, then Mauritius. So does that also indicate a sort of a trend, something which denotes some significant aspect that, yes, we are moving on this particular path?
Yeah, traditionally, if we look at India's FDI, Mauritius has been the leader. But with the change in the Indo-Mauritius double taxation agreement, that number is coming down. So you'd see over the next few years that number coming down even more. What you're seeing right now is basically the last few FDI deals which are sort of getting consummated. So I'm not surprised. Singapore has risen correspondingly, basically to take the place of Mauritius, and that's where it's coming along. And it's not surprising that the FDI, the free trade agreements, I think Mr. Agarwal was talking about, the free trade agreements that have been signed, you would find corresponding amount of FDI coming in from there. So I suspect that there'll be a lot of interesting data that will be coming from the countries like United Arab Emirates. Mm-hmm. Yeah, that's where we have a lot coming in from there. So in the next few years, you'll see plenty. What happens is that when the money comes in, obviously it gets structured in as many interesting tax jurisdictions, and that's a different issue altogether. But now with the world sort of coming in with the idea that you've got to have a minimum taxation, the tax holidays are not really those which are particularly enjoyable. So therefore, you'd find it's basically money following the flag. So you'd find large countries like USA, large investors like UAE, Singapore, typically, these would be the places from where you'd find. Okay. And you'd find quite a few of the European countries, money coming in from there. So already Cayman Islands, for instance, you've seen the money coming in from there, even though Indian tax authorities would be surprised, sort of wondering whether that's the right place to come. But if money is coming in from Europe, then you would expect the offshore British Islands, Cayman Islands, those places will start showing up more regularly on our FDI figures.
Okay, and that explains a lot of things there as well. All of you mentioned about various reasons or various aspects of why we are attracting so much of FDI. But another question from the industry's perspective, I'd like to bring in Mr. Agarwal and Mr. Mantri here. Mr. Agarwal, what is it that needs to be done from here onwards? Because obviously these all policies will have to evolve with the evolving structure of the global economy, our needs as well, our capabilities as well. So from the industry's point of view, what more needs to be done to ensure that this curve always has an upward movement only?
Well, the most important thing is the ease of doing business. We at PhD have a ease of doing business index, and we are continuously tracking and seeing the improvement in this ease of doing business. As we are improving our ease of doing business, therefore, the more and more investment is coming. So we believe that we have to find more innovative ways and to ensure that the ease of doing business is improved. We have the same kind of ease as Singapore has, as US has, for starting a new company. Now, Startup India initiative is a superb initiative, and that is the reason that there are hundreds and thousands of startups which have started, and as I said, 100 of them have even gone unicorn. So therefore, the production-linked incentive scheme which the government has come up with, this needs to be continuously updated. It cannot stop at this level. There is 113 lakh crores India Infrastructure Investment Fund which needs to invest. in these 5 years. And when such kind of investment is coming, it is going to pull the foreign direct investment also.
Okay.
So therefore, what we need to do is to ensure that whatever we have planned to invest, that actually gets invested.
Okay. Okay.
And also that the production linked incentive schemes do not stop today. More and more products and more companies are brought into the fold of production linked incentive. So maybe they came as a one-time schemes, but then they will need to be updated and more companies taken into the fold, because we are going to get bigger and bigger.
Okay.
There is a possibility that we, even in FDI, we cross China, Hong Kong and US. We become number 1 FDI destination in the world. And why not? And that we require if we put in the taxation schemes, which is already very good, flat 15% income tax. If you don't want to get into trouble, just give 15% tax, and that's very good.
Okay.
So this is one thing. Wherever there have been disputes, the government is resolving them with the international community. That is very important, actually.
Indeed.
International community should not think that India, people can go into disputes and they can lose a lot of their money.
Okay.
That seems to be the case earlier, but now with the new government, with this Modi government, they are ensuring that the international business fraternity thinks that India is a fair country.
Okay.
And we will always keep on boosting the rights, even in the IPR sector.
Indeed.
It is very important that the IPRs are protected for the world. But we are also working today. The government is also working, but it needs to do more, actually, to make Indian IPRs. So we are making our own 4G now. We are working on 5G today. We need to ensure in telecom, in chips, in electronics, in high-tech items, in drones, in defense, to have our own IPRs.
That's a very important aspect there, Mr. Agarwal. And you're right that the international investors should have the confidence, should feel confident while investing in India, and feel safe not only in other terms but also in terms of the safety of their investments. Mr. Mantri, your concluding comments on this aspect only, in terms of moving ahead, what more needs to be done?
Well, if I had to pick one thing, I would say that would be direct tax reforms. So I think comprehensive change in the direct tax code on the lines of what we saw with indirect taxes, with the promulgation of GST. I think we need something similar for direct taxes. Obviously, changing the great step forward, or rather 3 years ago was a great step forward. But there is a need for comprehensive reforms in direct taxes to bring that our direct tax code in line with the needs of a 3 trillion GDP economy that is aspiring to become a $5 trillion GDP economy and beyond. So I think that's the big one for me. I would say we need major changes on the direct taxes front.
Okay. That's also a very interesting and important aspect on the way moving ahead. Thank you so much, Mr. Rajiv Mantri, Mr. Sandeep Agarwal, Mr. Dilip Chenoy and Shubhmoy for sharing your views and insight. As our experts were pointing out, clearly, there are various reasons behind India becoming the preferred destination for the investors across the world in terms of FDI inflows hitting a record high in the financial year 2021-22. But of course, a lot more needs to be done with the evolving policies and also making it more lucrative for the investors to come and invest in India. We'll keep a close watch on all the developments on this front and various other aspects as well, and keep on bringing you the details. Till then, keep watching Sunset Television. Thank you.